In a stunning reversal of fortune, Tesla finds itself navigating turbulent waters as public sentiment turns hostile and sales figures plunge dramatically. What was once the darling of the electric vehicle world has transformed into a lightning rod for controversy, with its CEO's political activities sparking intense reactions worldwide. The perfect storm. Tesla's trajectory has shifted dramatically in recent months. After briefly reaching stock highs of nearly $480 in December following the presidential election, the company is now experiencing its first annual sales decrease in over a decade, exactly as its CEO predicted earlier in 2024. The numbers tell a sobering story. In California, Tesla's largest U.S. market, sales dropped 12% year-over-year. European markets paint an even bleaker picture, with February sales plummeting 45% in France, 53% in Portugal, 55% in Italy, and a staggering 76% in Germany. Meanwhile, China shows Tesla losing ground for 5 consecutive months as competitors like BYD report surging sales. This decline comes as Tesla's leadership has taken on new political dimensions, alienating a significant portion of its customer base. Showrooms that once symbolized innovation now attract growing protests, with demonstrators explicitly targeting the company as a proxy for opposing what they view as undue influence in government affairs. The innovation gap of Tesla's challenge stems from an aging vehicle lineup. The Model X is turning 10 this year, while the Model S approaches 15 years in production. Both flagship vehicles have received only minor updates since their initial launch. Although the Model 3 and Model Y, which constitute the bulk of Tesla's revenue, have been refreshed recently, the delays in regular updates have created opportunities for competitors. The Cybertruck, Tesla's only new model in 5 years, has been plagued by quality issues, with 8 recalls since its launch. The latest involves stainless steel trim detaching from vehicles, a concerning safety issue for a premium-priced product. As Tesla struggles, the broader EV market continues to expand. Americans purchased a record 1.3 million electric vehicles in 2024, representing a 7.3% increase year-over-year and claiming 8.1% of the total vehicle market. This suggests consumers aren't rejecting electric mobility, they're simply exploring alternatives from manufacturers like Hyundai, Kia, Honda, and GM. The self-driving Mirage Tesla's leadership maintains that the company's salvation lies in autonomous technology, artificial intelligence, and robotics. Plans to launch robotaxis in Texas and California later this year face significant regulatory hurdles, with the company lacking many required permits. More fundamentally, questions persist about whether Tesla's technology is capable of safely operating fully driverless vehicles. The company's repeated promises regarding full self-driving capability have come under intense scrutiny. After claiming for years that all Tesla vehicles sold since 2016 contained the necessary hardware for autonomous operation, leadership recently admitted that some vehicles would require computer replacements, triggering class action lawsuits alleging consumer fraud. Rising resistance. The backlash against Tesla has escalated beyond peaceful protests to concerning incidents of violence. Charging stations have been set ablaze, showrooms vandalized, and vehicles defaced. In Colorado, a woman was arrested for throwing a Molotov cocktail at a Tesla location. In Seattle, 4 Cybertrucks were destroyed in fire. A showroom in Oregon was riddled with bullets. These incidents have prompted unprecedented governmental response, with authorities threatening severe legal consequences for those targeting Tesla property. This protection has further inflamed critics who see it as evidence of preferential treatment. Corporate governance concerns. Tesla's board appears increasingly uneasy. Several directors, including the chair, have sold over $100 million in Tesla stock since January. However, shareholder intervention seems unlikely after investors twice approved a massive $56 billion compensation package for the CEO. The company's future hinges largely on delivering promised innovations, a more affordable vehicle, next-generation platform, and functional robotaxi service. Without these developments, Tesla may struggle to regain its former market position. A watershed moment. What's unfolding represents more than typical corporate turbulence. It's a fundamental shift in how a significant segment of consumers views Tesla and its leadership. The company that once represented an optimistic vision of sustainable transportation now finds itself embroiled in political controversy that threatens its core business. For longtime Tesla supporters, this transformation has been jarring. Many early adopters were drawn to the company's environmental mission and cutting-edge technology. Now, some are selling their vehicles at substantial losses, publicly disavowing their former brand loyalty. Whether Tesla can weather this storm depends on multiple factors: its ability to refresh its aging product line, deliver on technological promises, and navigate the complex political landscape its leadership has chosen to enter. One thing is certain: the company's path forward will be far more challenging than the relatively smooth road it traveled for much of the past decade.